Hi all, welcome to Diversified Finance. My name is Lakal. Today we're going to discuss how to dollar cost average buy and sell. So before we start, let's say we're going to assume that you have done enough research on the asset class that you're gonna put your money into. So for this example, I'm going to take Bitcoin. The first point is a target investment. So you need to have a target. Let's say that, for example, that you planning to invest $10,000 and you planning to buy Bitcoin with $10,000, or it could be you planning to accumulate zero point 0.5 Bitcoin as an investment for the coming 12 to 24 months. And the second point is duration. So you need to have a duration as well. It's not that you're going to keep one day you have to sell, so and then one day you have to think, okay, when I achieve this goal, once I have invested $10,000 into Bitcoin, or once I've achieved 0.5 Bitcoin, that's when you're gonna stop buying anymore. So it could be maybe you're gonna do it in 12 months, or it might take 12 to 24 months. So duration, you have to have idea of duration as well. So you can probably write it down on a piece of paper, and every time you accumulate DCA buy, you can go back and forth and check whether you have reached your goal or not. And the third point is profit taking at price level. So this goes under dollar cost average sell. So you need to make sure, like, you accumulate Bitcoin and one day you have to sell, like, for profit. So for example, you start buying Bitcoin when Bitcoin is at $10,000 USD, and when you realize Bitcoin has gone about 10k up to 20k or 25k, 30k, that's when you probably gonna start thinking selling your Bitcoin you bought maybe 12 to 24 months ago. So specific price levels is very important. So because no matter what happens, you might think the market will go up further, but no matter what happens, you need to be very disciplined, and then whenever you see your price levels are reached, you can sell a portion of what you accumulate for the last 12 to 24 months. So for example, to explain further, let's say in January 2020, you looked at Bitcoin, and the price of Bitcoin used to be around like 10,000 USD. So you are planning to invest, just two scenarios: $10,000 worth of Australian dollars, or your target is 10k to buy 10k worth of Bitcoin, or to achieve accumulate 0.5 Bitcoin. So let's say in January 2020 you looked at the Bitcoin price and you realize one Bitcoin is around $10,000. So the first thing you can do, instead of putting all your money and buying like one Bitcoin, $10,000 worth of Bitcoin, or buying zero point 0.5 worth of Bitcoin, what you could do is put only 20%. So you just take $2,000 out of this 10k and you buy some Bitcoin. So for this scenario, you just buy only 0.1 Bitcoin at $10,000 per Bitcoin. The reason why we do that, like, you can take all that 10k and put all that money into Bitcoin, or you can accumulate 0.5 Bitcoin straight away when Bitcoin is at 10,000. But the next day or next month, if Bitcoin goes down by 30, 40, 50%, right, you don't have enough money to get back in at lower prices. So this is why dollar cost average is very important. What you simply doing is you buy some right now, like, maybe 10 to 20% you buy right now, and you wait for the market to go down, and you can keep on accumulating every time the market goes down. So this is very important, and it is called the diversified dollar cost average buy. So let's say in a couple of months after you realize Bitcoin has dropped to 8,000, and then you think, okay, this is a good opportunity to buy some more. You from that so now you have 8k here, you take 2k out and buy 2k worth of Bitcoin, or you can buy another 0.1 Bitcoin, at this price at $8,000 per Bitcoin. Same at 6K, 4K, and then when you see the price has gone up quickly, like it recovered, even especially during COVID crash, Bitcoin dropped to high 3,000s, and that was a good time to get in. Either you can buy more at that time when everybody's selling and nobody wants to buy, and when everyone is scared, that would be like a better time for you to accumulate more, right? Or you can just follow whatever you've been doing, and then when you later on when you realize Bitcoin price has fully recovered and it has gone about 10K, you can buy another 2K worth of Bitcoin or 0.1 Bitcoins at 12K. So let's say you did this in 9 to 12 months or so. So after 12 months, now you realize you reach your target investment. Now you have $10,000 worth of Bitcoin and 0.1 or 0.5 Bitcoins sitting on your wallet. But the thing is, when Bitcoin goes about 10K, right, you are already in profits. So this is exactly why we're not gonna take all your money and try to pick the bottom, because it's really hard to do. We don't know what's gonna happen tomorrow or few months later. So that's exactly why you can, the initial investment that you're gonna do, you can divide it into 5 portions, and every time in the market goes down, you add 20% and try to reach your target investment like that. So this is how you do a dollar cost average buy. So now you bought Bitcoin, $2,000 worth Bitcoin at 10,000, 8,000, 6,000, 4,000, and 12,000. And that becomes, when you add all that, it comes to 40 divided by 5, because you bought Bitcoin 5 times, 2,000 each, and your average price is $8,000. So it's as if you bought one Bitcoin, you invested 10K when Bitcoin is at $8,000. So now let's discuss how to dollar cost average sell or DCA sell. So as I explained earlier, you need to have specific price targets. For example, when Bitcoin hits 20K, I'm going to sell 10%. When Bitcoin hit 40K, I'm going to sell this much. So likewise, when you do DCA buy, you need to have specific price levels where you're going to take profits. So for example, let's say in few months Bitcoin goes up to 20K, and in that when that happens, you take 10% out of the market. So you take $2,000 out, or you just sell 0.1 Bitcoin. And when the market goes up to 30K, you sell another 10% and take $3,000 out, or 0.1 Bitcoin. And then you see Bitcoin goes up to 45K, and you can see Bitcoin is going up a lot higher, right? And the price is going up, price is becoming a bit parabolic. When you see that, you need to sell more. You have to sell aggressively. So in that kind of scenario, you increase your selling. Instead of 10%, you sell 20% and take some money out of the market. And then you see Bitcoin, when Bitcoin goes out to 50K, you sell another 25%. So likewise, instead of waiting for the market or you're trying to pick the peak, because it's very hard to do. No one knows, when Bitcoin has 30K, no one knew that Bitcoin is going to go to 65 or 55. No one knew it, right? So whatever you see is whatever you get. So whenever you see Bitcoin at 20K, you start taking profit little by little, like 10% each, 20% each. And especially when you see these crazy numbers, so Bitcoin just went from 10K, it went down to 4K, and then went back up to, from 10K it dropped to 4K, and then it went back up to 55K. So now you know a correction is near, because the chart looks parabolic. And then you start taking money out aggressively towards the end. And after that, everyone knows what happens. Bitcoin went up to like 65,000 or something, and then it dropped, and now it's sitting on like around 30 to 35k, something like that. So the good thing is, for the people who took profit, like who used DCA, dollar cost average sell, now the good thing is they've taken money out of the market. If they want, they can go and buy back Bitcoin at 30,000. So you sold 20% at 45k, another 25% at 55k. You can use that money, or you can include this money as well, and take that money, and some portion, like you take a portion out of that profit, you can use DCA buy again when Bitcoin is at 30k, and if it drops to 25k, you use another percentage and buy back in. If it goes to 20k, you do the same, so you can rinse and repeat. And this strategy is very, very important, and you need to have a lot of discipline, as I mentioned earlier. So it's better to have specific price levels, like as we know, a lot of my friends, they're trying to pick the peak, like, and then they were waiting, and there's so much greed, and then they did not sell, and right now the market has gone down. Now they can't sell and take profit out because the market is already down, and you don't feel like selling it now. So more than DCA buy, DCA sell is very important, right? You can buy, even if you buy it at high prices, right? If you're not going to sell, then you're not going to get much out of the market. So it's very important to have certain price levels, and take money out every time when the market goes up. So that's how you do DCA buy and DCA sell. Thanks for your time. I'll talk to you in the next video. See ya.